Hello and welcome to Startup Street. I'm Arundathi Ramanan and with me is Shruti Mishra. These are the top headlines from the startup space. PharmEasy recalls its draft IPO papers with plans of raising funds through rights issue instead. The e-pharmacy player cites market conditions and strategic considerations as reasons behind the withdrawal of its 6,250 crore rupee IPO plan.
Paytm shareholders approved the reappointment of Vijay Shekhar Sharma as the Managing Director and CEO for another 5 years. The vote to retain the founder as the company's CEO comes despite concerns raised by proxy advisory firms over remuneration and other issues.
No consideration to levy charges on UPI services, says Finance Ministry. The clarification comes after the RBI released a discussion paper seeking feedback on the matter. Concerns of cost recovery have to be met through other means, the ministry says.
Sources tell CNBC-TV18 that senior officials of tech giants like Meta, Google, Amazon, Apple and Netflix are due to appear before a parliamentary panel on Tuesday on concerns over anti-competitive practices.
Nandan Nilekani-backed ShopX shuts down operations, filing an application under the Insolvency and Bankruptcy Code. According to reports, the e-commerce enablement startup had raised over $50 million and was valued at over $100 million in its previous rounds.
Sequoia's Startup Accelerator program Surge announces its 7th cohort with 15 early-stage startups from India and Southeast Asia. Software and enterprise-focused startups dominate the list, accounting for at least 10 out of 15 startups.
One of the world's most valuable startups, Stripe, lays off around 50 employees at TaxJar, a tax-compliant startup it acquired last year. According to reports, this comes soon after the digital payments platform saw its valuation plummet from $95 billion to $74 billion in an independent appraisal. Those were the headlines that we're tracking for you this evening. But on What's Brewing today, API Holdings, the parent firm of online pharmacy PharmEasy, has decided to withdraw its draft red herring prospectus filed with the SEBI in November of last year, citing volatile market conditions and strategic considerations. Yash Jain is here with all of those details. Yash, take us through those details.
Well, looks like the route to Dalal Street wasn't an easy one for PharmEasy. That's because the IPO plans for this online pharmacy came to an end, at least for now, with an announcement from its parent company API Holdings suggesting that PharmEasy has decided to withdraw its IPO DRHP. Remember, this IPO document was filed with market regulator SEBI over a month ago. This IPO, of course, was very crucial for PharmEasy as it would have helped the company raise about 6,250 crore rupees, the funds which were intended to be used towards debt retirement, also towards funding of its organic and inorganic growth opportunities. So, what happens to those objectives now? API Holdings has also said that PharmEasy will now consider launching a rights issue, which will be through issuance of compulsory convertible preference shares or CCPS. These CCPS would be priced at about 100 rupees per CCPS, and that rights issue will open in the first week of September, will remain open for the entire month. Of course, rights issue will give the existing shareholders of PharmEasy an option to raise their stake into the company. But what will be important to monitor is that how this rights issue really values PharmEasy. Remember, this has to be compared to the recent valuation which happened just a year ago and valued PharmEasy at about $5.1 billion.
Thank you, Yash, for those details. Appreciate you joining us. Moving on, Nandan Nilekani-backed Fundamentum Partnership has raised $227 million for its second fund, which would be invested in early growth stage Indian startups. Now, Fundamentum plans to fund enterprises that have attained product market fit and have developed momentum in their scale-up journey. Fundamentum also plans to lead or co-lead $25 to $40 million rounds, investing in 4 to 5 startups each year. To elaborate on the road ahead, joining me now is Ashish Kumar, the co-founder and general partner at Fundamentum Partnership. Ashish, welcome to Startup Street. And before I talk to you about the fund, let's talk about your portfolio company, PharmEasy, trying to withdraw its IPO. Do you see this as a trend of IPO-ready startups now looking at other avenues to raise funds?
Hi, Shruti. Thank you so much. Absolutely. I think some of the companies will look at all the options. Public market is one option, private market is another option. And whenever they find one market more attractive than the other one, they will look at it. So I think it's a good step by PharmEasy, and I do anticipate that some other companies will be considering these options in future.
Okay, all right. Let's talk about your second fund now. You've tested the waters with the first fund. How do you plan to allocate your second fund? What have been the learnings so far? And will you continue to focus on tech-driven enterprises in the consumer internet and the enterprise software space in India?
Yeah, so we are very, very excited about the technology startup ecosystem, irrespective of the larger market headwinds that we are talking about. We feel that the entire maturity in the technology startup ecosystem is far better than what it was even 2, 3, 4 years back. So we continue to with the same strategy. We will invest. In fact, we are accelerating our investments. Earlier, we used to make 1 to 2 investments per year. Now we are going to make 4 to 5 investments per year. Our current fund is also more than double the size of the previous fund. So yeah, absolutely, we will continue with the same strategy.
Okay. Ashish, if you could talk to me about Fundamentum's approach of concentrated bets, also what emerging sectors within tech are you betting big on now?
So there are 3 or 4 sectors where we feel that there are structural tailwinds in the economy. One is the entire software as a service space.
Okay.
Effectively companies targeting Western markets, but being built from India. So that's one sector that we are very excited about. Healthcare is one sector that we continue to be very bullish about. From the fund one, we made investments in 2 companies on the healthcare side, and we see significant more opportunities in that sector as well. And the third space, I will say, digital content or the applications which are being built for India too, the next 400 million users, those are the applications that we are pretty excited about.
Okay, so SaaS, health tech, and digital content creation. Ashish, Fundamentum's first fund was deployed in early growth stage startups, including PharmEasy and Spinny, which have attained unicorn status. In fact, Fundamentum's portfolio companies have collectively raised over $1 billion in follow-on rounds. With the second fund, you plan to lead or co-lead $25 to $40 million rounds. And given the current environment today, how will you be selecting the startups and their business models, and how important is the path to profitability for you?
In fact, Shruti, at this point of time, it is a great time to be a early growth or the mid-stage investors, because we are sitting on an all-time high deal flow. There have been several companies which have gotten funded in the last 12 to 24 months. All of this are actually available to us as in the Series B space or the early growth stage. We have always been very selective, and at this market also allows us to be a lot more selective about it. We have always also focused on the unit economics. That will continue to do that, but we feel that this is the time to actually go aggressive. This is the time to partner with great entrepreneurs and who are building businesses for the next 20, 30, 40 years, and then partner with them, give them capital, give them our advice. And that is the model that we follow, the investment plus advice model. And
yes,
we feel that next 5 years is going to be significantly better than what we have seen the last 5 years to be.
Okay. Picking up from what you just said, Fundamentum has operated on a model of investment plus advice. Ashish, if you could elaborate on this, beyond capital investment, how does the team of entrepreneurs turned investors mentor companies and assist them in their scale-up journey? Also, if you could share some use cases.
Yeah, so if you look at what has happened in India, truly the startup ecosystem started developing around 12, 13, 14 years back. And we have gotten very good at the iterating over the product market fit. But we haven't seen too many scaled up companies. So that journey is probably 3 to 4 years into the making. What the entrepreneurs require is expertise on building organizations, strategy on resource allocation. I would say these are the 2 largest areas where we focus on. And if you look at our team, including the likes of Nandan, Sanjeev, a lot of our advisors who have all built businesses with 10,000, 20,000 and more number of people, we think that we will be very useful in helping an entrepreneur think through these orbit change thinking.
Okay. Ashish, yesterday was World Entrepreneurship Day. What advice would you like to give to entrepreneurs when they face setbacks? After all, starting up, the journey is a long and a tough path.
My strong recommendation is always be wedded to the problem. Do not be wedded to the outcome. Whenever you're starting a business, think long term, think 20 years, and choose a problem that you are willing to stay with for the next 20 years. Ups and downs are, all part and parcel of the game. In fact, best companies do get built during this time. So, what doesn't kill you makes you stronger. So, absolutely persist.
Okay, absolutely persist. And one last question before I let you go. How soon will you start deploying funds from the second fund, and how many for this year?
So we have already selected a couple of companies,
Okay.
and you will hear about them very soon. And I do feel that we will probably make another 4 to 5 investment in the next 12 months.
All right. Okay. Ashish, we wish you the very best and many thanks for joining us on Startup Street today.
Thank you, Shruti.
All right, moving on. On Investor Eye today, we put the spotlight on India's leading job tech investor, Unitus Ventures. The VC firm celebrates 10 years and has close to $50 million of assets under management across 2 funds. To talk about Unitus' 10-year journey and the growth of Indian startups, joining me now is Srikrishna Ramamurthy, Senior Partner at Unitus Ventures. Welcome to Startup Street. What do you make of India's startup evolution? What have been the inflection points for you over the last decade, Srikrishna?
Hi, Shruti. Hi, Arundathi. It's great to be back on your show. Thanks for having us. The questions that you were asking sort of made me step back and think through a little on our own journey. And I think we've had the privilege of working with a number of fantastic founders over the past 10 years. And that's, I think, pretty much been synchronous with probably the greatest decade for entrepreneurship in India. And I think a few things that struck me as things that have changed. I remember back in 2012 when we got going, seed checks that we were putting out were as low as 50, 60 lakhs. And we were one of the few institutional investors that were doing that. I think today founders have a far greater amount of choice in order to be able to raise capital. I think more than this being a great time to be an investor in India, I think it's a fantastic time to be a founder and to be an entrepreneur in India. And I think that's only gotten better over the past 10 years. In terms of inflection points, I think there have been quite a few. The proliferation of Aadhaar, at least back in 2015-16, led to a number of startups building on that, including likes of Better Place and some of the others in our own portfolio. And I remember us talking about that. I think demonetization obviously was a big inflection point for fintech. The pandemic clearly for a number of startups, not just in health tech, but across the board. So I would say a number of inflection points there. And then, of course, I think that you're starting to see the ecosystem mature now with M&A activity, and of course, last year with IPOs. And some of those, I think, are still early signs. But overall, I would pick a few of these as really being inflection points and what have driven entrepreneurs to actually then focus on real world problems, which are the kind of entrepreneurs that we're looking at to back in Unitus.
Okay, so thank you for taking us through the tailwinds in the Indian startup ecosystem over the years. But what is the future outlook? What makes Unitus bet big on the Indian startup story?
I think we've always gone after big problems and large challenges and large problems that are waiting to be solved. In the early decade of Unitus' own existence, the focus was microfinance and focusing on solving credit needs for mass populations. And that evolved over a period of time. And we're now seeing access to jobs and improvement in jobs as really being a serious problem. I mean, I think the issue, the fact remains that 10 lakh youth turn 18 every month in India. What are we going to do about that? Right? How are we going to solve this large demographic and capitalize on that dividend that's coming out from there? So I think that's really what led us to focus on job tech, as we call it, and the fact that we saw a number of startups within our own portfolio emerge and solve problems. So, for example, Masai School, which is a 0-to-1 bootcamp approach to coding. We've got GigForce, which is an on-demand temp staffing. So all of these are playing at different levels in the spectrum, but really addressing the access to jobs problem and or using upskilling as a mechanism by which people are able to access jobs and the like. And then we've also got companies like Eduan, Supermoney, etc., which are solving the financing issue.
Absolutely.
And we see that as a horizontal. So I think that the outlook remains that this is a large problem waiting to be solved, and there are going to be entrepreneurs that will take creative and different approaches to solving this. I think that's really what is driving our thought process.
All right. Hi, Srikrishna. Arundathi here. So let's talk about Unitus then. You have about 50 million of AUM across 2 funds and have 25 portfolio companies. What is your investment thesis? What does Unitus look for in startups?
Sure. Fundamentally, we remain coming in at the early stage, so playing between seed and pre-series A. We're looking for founders that have established some level of product market fit. So we're not looking at pre-revenue, but ideally there is some proof that the dog is eating the dog food kind of thing. There is strong unit economics. We've always been focused on that. It's not something that we talk about more recently. I think given that we focus on the seed stage and in companies that are solving fundamental problems, we've always stayed true to that course on saying, look, unit economics, if not now, but at least in 2 years from now, need to have viability. So that remains an area in terms of what we look for from founders. And then really, what's the founder's vision for how she or he is thinking of solving this problem, and why are they really going after a problem like this? And this is staying true now. I mean, our own journey has evolved over time, going beyond job tech now into aspects around enterprise tech, around SME digitization, small business enablement. And for all of these, I think the fundamental questions that we're asking haven't really changed.
Right. So
in terms of, why is this a problem that the founder is passionate about solving, and how are they thinking about this? What have they learned along the way?
Right. So you're looking beyond job tech as well. But, primarily you invest across job tech and fintech. So what about this space excites you? And what kind of changes has the pandemic brought to both of these sectors?
Sure. So I think with jobs, I talked a little bit about that. The problem remains, and I think there are clearly far more people than there are jobs that are there, and there continues to be different factors at play there. And I think with fintech, look, fundamentally the demand for credit will far exceed the supply for at least for the next 20 years. And I think while a significant amount of what we do in fintech and what most folks do in fintech remains credit and credit enablement.
Right.
I think that opportunity will continue. So, that's a sort of a no-brainer there.
Yeah.
And on job tech, I think, look, the future of work and the way in which jobs are being taken up and roles that people are playing are also evolving. And we see opportunities there as well in terms of, how problems are going to evolve and change along with how future of work evolves.
Right.
And so if, for example, we've been looking at a company that's doing AR, VR for skilling, for example, which 5-6 years ago wasn't really a possibility,
right.
But today it's a possibility.
Absolutely. And Srikrishna, if I could quickly ask you, Unitus has seen 5 exits so far. So how do you view the current climate as VCs seek returns from growth stage investments, especially at a time when startups are putting brakes on their IPO plans? So if you could quickly tell us that.
Look, I think that for us, the exit strategy largely remains secondary sales into incoming investors or M&A activity in the startups that you're investing in. Considering that we come in fairly early, the IPO journey is long, and we have pressures to exit likely before that. Although we'd love to wait until an IPO happens in these companies, but I think by and large, exits will likely come through in general from M&A and secondary sales. I think IPOs, of course, given the current situation and how things have played out over the past few months, people are sort of pausing on that front. I don't know yet if public markets are necessarily as welcoming or have a good sense of these things. I don't even know if founders are fully ready yet. Some are, some aren't.
Yes.
So it may make more sense to focus on M&A, perhaps even on global M&A and the.
All right, so founders are taking alternative routes. We've completely run out of time, Srikrishna, but many thanks for joining us on Startup Street and wish you the very best.
Always happy to chat. Thank you so much.
On that note, it's time for us to head into a short break. But coming up on the show, over 2.5 crore Indians live with one form of disability or another. And this is opening up a huge opportunity for assistive technology, especially given advances in robotics, artificial intelligence and machine learning. But there are huge challenges. A special report coming up. Stay tuned.